Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 77, recorded here on August 13th, 2023. This podcast is for entertainment only and is not investing advice, so please do your own homework. All right, we'll get started with the market update and outlook. Then we'll get into the Bitcoin news. Got a lot of stuff to go over this week. I went deeper into the Google search to find some interesting stuff. And surprise, surprise, most of it is not on mainstream media, as usual. But did just get back from vacation, so feeling refreshed and ready to dive in. So NASDAQ and the S&P both posted a second straight weekly decline as hotter than expected U.S. producer prices data pushed Treasury yields higher and sank rate-sensitive mega-cap growth stocks. The much-anticipated consumer inflation report on Thursday showed that the headline and core consumer price index was unchanged from June, bolstering bets among market participants that the Federal Reserve would hold off on further rate hikes. However, hotter than anticipated producer inflation data on Friday played spoilsport for risk-on appetite, with both the headline and the core producer price index for July rising from the previous month. Still, the overall picture points to a slowdown in inflation and has even led to hopes of disinflation. There is a rising consensus among traders that the Federal Reserve will be able to deliver a so-called soft landing. For the week, the Dow Jones average scored a 0.6% gain, while the S&P edged to 0.3% lower, and the Nasdaq Composite lost 1.9% for its biggest back-to-back weekly loss since December. The energy sector had the strongest return of the week on the back of higher oil prices, while the technology sector saw the biggest drop. Read a preview. And of course we'll go into the preview of next week here shortly. Only comment on this is if you think this is a bit ridiculous, that we are wondering what the Fed's going to do, and that's pretty much dominating investors' mind. It is ridiculous, and especially because these. I think I've talked about this before, but the statistics have been skewed so much over the years and how they're calculated that they've pretty much lost all their meaning, other than some kind of directional signpost. But if you think inflation is really what is reported as the consumer price inflation, you're fooling yourself. And again, all you have to do is go to the grocery store, go to the gas station, or buy anything else that you need to live your life that you need every day, to know that it ain't 3% or 4% or whatever they report. But it is kind of interesting that this really dominates the investing discussions, whereas in the good old days, people actually looked at companies and looked at their underlying fundamentals and decided whether or not the market was pricing that correctly or not. Now it's first half of the year, tech stocks took off. Now they're selling off. So if you didn't get in on that ride up, you better get out, because now everybody's pivoting towards value stocks, and interest rates are going to be higher for longer, and inflation might not be done with us yet. And if gas prices and oil prices continue to rise as they have recently, then that will trigger the next wave of inflation. But then there are people that are like, no, deflation's coming. It's not inflation. It's going to be deflation. Prices are going to keep dropping. So of course, depending on what you believe, you'll be investing in different things. And so that's why I always talk about diversification because I'm just tired of it, just, you know, spread the table. Sometimes part of your portfolio is going to work, sometimes it isn't, and hodl Bitcoin. So, moving on to the week ahead, the retail sector will be in the spotlight next week with Home Depot, Target, and Walmart lined up to issue their Q2 earnings reports and update on consumer trends. The U.S. Census Bureau will also issue the July retail sales report, which is forecast to show a slight acceleration from the pace seen in June. Traders will also be watching the release of FOMC minutes from the Fed's July meeting for more clues on the direction of interest rates after the CPI print calmed some nerves. Overall, the underlying details of the July CPI inflation data are consistent with ongoing progress on disinflation. And for those of you who don't know, disinflation just means a lower level of inflation. So, i.e., going from 9% to 3% is disinflation. Deflation is actually when it goes negative, like -1%, -2%. And central banks can't have that. They will not allow that to happen very long, and that's when they fire up the money printers and gold and Bitcoin take off. So if we do see deflation, then if you're holding gold, Bitcoin, hard assets, then you don't care. Well, you do care because that could be really bad for the economy, but from an investing standpoint, that's not a big deal. Inflation, different set of problems, but again, the Fed is definitely going to continue to fight that with higher rates, which some people have said, hey, maybe higher rates isn't going to help inflation because it's going to increase the amount of interest that the government has to pay, which then requires them to borrow more, which then, you have to think about it too. All the interest that the government is paying on, say, short-term treasuries, where does that money go? I mean, it goes into, if you're not in bank accounts making 0.01%, if you put some of your money or most of your savings into money market funds or government treasury, short-term government treasuries, you're getting that money. So at a minimum, it's going to give you a wealth effect where you're like, hey, I'm feeling pretty good. I'm getting $1,000 a month when I used to get nothing, or $100 a month and I used to get nothing, right? So then you feel richer, you want to spend more, or you actually take that money and use it for something, you know. And so it's it's ironic because it's almost like the harder the Fed tries to calm things down, the more they're likely to stir the pot with their activity that they're doing. Anyway, bringing it back to this, core services inflation trended higher in the month. Other component level trends are evolving in line with our expectations. In particular, rents and used car prices softened. In fact, I read something the other day that said used car price declines are actually accelerating, which makes sense because they were ridiculously high during the aftermath of the pandemic because nobody could buy a new car. So everybody bought used cars and then the prices went crazy. But now, interest rates are super, super high for car loans. They're notably higher for used cars than they are for new cars. So, and as you know, people have therefore been buying new cars over used cars, but now the prices are starting to drop on used cars. So, and then rents, of course, have started to go down, but that's a very lagging indicator, so you don't really see that in the CPI for a while. Uh, Clothing and airfares also softened. And this is all from a Goldman Sachs macro strategist, Gurpreet Gill. Um, so that's kind of what's happening in the markets. We're going to continue to watch the Fed to tell us where we need to put our money. And man, if that doesn't wear you out, then nothing will. But definitely, I think from what I've read in the last week or two, most investors, whether you're a bull or a bear, are super frustrated because the market is just bouncing up and down, sideways. So, you go into one thing and then the next day it sells off. And then you go into something else and then, it's the wrong thing because it's another thing that, and again, with all the program trading that goes on and stuff, it's pretty tough. So, I don't know. Buy and hold, diversify, leave Wall Street to the experts, let them have fun destroying each other uh, back and forth. All right. Now we will move into the Bitcoin news. Got a lot of stuff to go over here. First one is from Decrypt. This was posted on August 10th. Post Malone disses CBDCs on Joe Rogan podcast, and Bitcoiners love it. And I saw lots of posts of this video on my X, I guess it's called now. It's not Twitter anymore, feed. So I thought it'd be interesting to dive into this one. Central bank digital currencies are permeating the mainstream narrative lately as United States politicians rail against the concept. Now, Bitcoin supporters are cheering after prominent public figures Joe Rogan and Post Malone trashed the idea of a digital dollar. In a recent conversation with famed rapper Post Malone on the popular Joe Rogan Experience podcast, the duo discussed what they see as the threats that government-backed digital currencies pose to society at large. Asked by Post Malone what he thinks of the prospect of a US CBDC, Rogan responded, "No fucking way, no way. I think that's checkmate. That's game over." Post Malone agreed with the sentiment. The conversation veered into a dystopian outlook on society, with Rogan raising red flags regarding a possible social credit score that will be used to monitor and control behavior, which, as most of us know, is happening right now in China. Although the rapper reckons an all-encompassing tracking system already exists for Rogan, the end game is government control over people's own money. They would like to be able to strip you of your money, Rogan said of the US government, suggesting that this will help make sure people comply. This compliance, according to Rogan, whose podcast has amassed billions of total episode downloads to date, will be driven by a fear of the government arbitrarily seizing people's money. People won't want everything they've worked for to be taken overnight instantly, he said, emphasizing that this will leave people feeling powerless and with nobody to call. Absent from the conversation was any mention of Bitcoin or cryptocurrency, but the back and forth by the two celebrities yielded largely positive reviews from crypto industry leaders and personalities who broadly agree with the potential negative impacts of CBDCs. Custodia Bank CEO Caitlin Long, who is already tossing up with the government, sees eye to eye with Rogan and Post Malone. "I agree with both Joe Rogan and Post Malone," she told Decrypt. "A CBDC would be the end game because it would be the end of privacy and the end of property rights and financial assets." For Sam Callahan, Bitcoin analyst at financial services company Swan, the conversation was welcome. "It's encouraging to see a popular figure like Post Malone address this important issue on the country's largest podcast," he told Decrypt, signaling its penetration into the mainstream consciousness. That sentiment has been pushed into the mainstream by two U.S. presidential hopefuls of late from both sides of the aisle, Ron DeSantis and Robert Kennedy Jr. The latter claimed previously that central bank digital currencies are instruments of control, while DeSantis suggested that President Joe Biden is waging a war on Bitcoin and cryptocurrency. Yeah, that's why you want to own Bitcoin, because nobody can take it away from you and mess with it. And it is outside of government control. So stay humble and stack sats. That article mentioned Custodia Bank, so I thought it was interesting to get an update on what they're up to. As you may recall, Custodia Bank applied to be a full reserve bank, um, meaning that deposits would be 100% backed by whatever you deposited, and so they were going to handle Bitcoin deposits, and so therefore, if you deposit one Bitcoin in the bank, they'll keep one in reserve, and so you never have to worry about getting rug pulled by your bank. and the FDIC didn't like that and declined their application, and so they've been fighting with them. But it looks like they're going to continue to operate. Because they already are operating, I guess, in the state of Wyoming, I believe. So this article's from Bitcoin.com. This was updated a couple days ago. Custodia Bank goes live, bridging digital assets with US dollar payments. Many crypto and narrow banking proponents have awaited the arrival of Custodia Bank, a financial institution that is tech forward and customer centric. We're grateful to our partners who appreciate our approach of complying with banking laws and regulations, to Wyoming for its enabling laws, to our team and investors, and to the law-abiding digital asset industry, said CEO Caitlin Long. Custodia says the bank's regional bank-style risk management program, along with its dedication to following regulations, set it apart from competitors. Services now available include US dollar deposits and US government money market fund services tailored to US-based business customers. This includes digital asset businesses, fintechs, banks, corporate treasurers, trusts, pension funds, and startups. The bank's strategy is to eventually serve customers worldwide, providing enhanced regulatory clarity and minimized transactional risk with its unique reserve model. Custodia operates under the first Special Purpose Depository Institution, or SPDI, legal and regulatory framework in the United States. This approach allows the bank to offer a full suite of financial services for both US dollars and digital assets. Demand deposit accounts are protected under a 100% reserve requirement, and the bank offers API solutions for programmable accounts, payments, settlement, and future custody products, Custodia's website discloses. And going back to the Federal Reserve thing, I think they were applying for a Federal Reserve master account. So they're operating, but they wanted a Federal Reserve master account, and they were denied that because of whatever, their business model and that sort of thing. But I do think that they're still able to, obviously they're operating, so they're still able to operate and provide banking services, along the lines of what they described there. Custodia Bank's journey to this point has been marked by challenges. In December, they informed the U.S. Federal Reserve of their intention to complete a specific task list and followed through despite it no longer being required. Independent reviews, new partnerships, and the development of new services to meet market needs were all part of the process, Custodia detailed on Friday. In January 2023, the Federal Reserve Board issued a denial for Custodia's application to become a member of the system, citing significant safety and soundness risks related to crypto assets and an insufficient risk management framework. The denial reflected broader regulatory skepticism toward digital assets and narrow banking techniques. However, Custodia's perseverance and alignment with Wyoming's innovative legal framework for SPDIs have allowed them to navigate these challenges and emerge as a regulated bank. So there you have it. So we wish them luck, and it's good to obviously have Bitcoin-friendly banking institutions, because a bank like Custodia can partner with many of the Bitcoin-only companies that allow you to buy Bitcoin, using an OTC desk or whatever, they have, and will support, adoption and being able to easily buy Bitcoin in the United States. So that's actually really good news. This article is a little older. This is from July, but I found it on the South China Morning Post. And I thought it was kind of interesting because it talks a bit about China and, how they sort of tried to ban crypto, and yet it doesn't really work, it's always interesting because, that's the most authoritarian country probably in the world, certainly the most technologically advanced authoritarian country in the world. And so it's always interesting to see how what they're trying to do does or doesn't work. So this article is entitled "China's Crypto Crimes Expose Capital Controls Loopholes as Millions in Virtual Currencies Seized." Chinese police appear to have stepped up their crackdown on cryptocurrency-related crimes in recent months, and their big seizures in a few prominent cases show how people are using virtual currency to bypass Beijing's strict controls over the yuan. With the yuan having gradually depreciated against the US dollar this year, reaching a rate of 7 to 1 for the fourth time since 2019, capital outflows have been on the rise. A higher yuan number means it takes more yuan to buy a US dollar, and the yuan is currently about 6.5% weaker than it was a year ago. On Tuesday, police in Jingmen, Hubei province, discussed an online gambling case in which virtual currencies were widely used to avoid regulation. It was said to involve 400 billion yuan, or $55.4 billion US worth of total turnover circulation, and more than 50,000 people. Police did not say which virtual currency was used, but they said they had already managed to freeze multiple accounts with a combined value of US 160 million. In a separate case on Monday, police in the central province of Shanxi said that they had busted a money laundering case involving 380 million yuan worth of USDT, a stablecoin issued by Hong Kong-based company Tether to mirror the price of the US dollar. The State Administration of Foreign Exchange, the nation's forex regulator, has implemented a variety of measures to monitor cross-border capital flows. It also fines violators. 10 firms or individuals were fined in late June to help maintain the forex market order. The recent virtual currency cases, however, shed light on loopholes in China's capital control system. Chinese regulators have long banned the mining and trading of cryptocurrencies such as Bitcoin and Ethereum, citing their perceived threat to the financial system. And for the past few years, Beijing has been rolling out its central bank digital currency known as the e-yuan or e-CNY, with a series of ongoing pilot programs across the country. This is China's official currency in digital form with the same value transferable like cash using an app. Many cryptocurrency miners or traders have subsequently gone underground or moved overseas, including Hong Kong, which could become a cryptocurrency hub. The persistent depreciation of the yuan this year due to its widened yield differential with the US dollar has added to the capital outflow pressure. Foreign investors sold Chinese debt for the sixth consecutive month in June, even as emerging Asia saw strong inflows of funds, according to the Institute of International Finance. A total of $1.59 billion US was removed from China's debt last month, compared with US $4.19 billion in May, its data showed. Chinese equities posted $1.93 billion worth of inflows from overseas funds in June, the IIF said, compared with May inflows of $126 million. Wow, that's a big increase. Foreign fund managers have also been selling vast amounts of Chinese securities over the past 2 years in response to Chinese policies and mounting US-China tensions, according to Atlantic Council report last month. International institutional investors have been net sellers of about 1 trillion yuan of the country's bonds since early 2022, the report said. So anyway, like I said earlier, this is interesting that the most authoritarian country in the world with, a closed capital account is still having trouble managing that with presumably Bitcoin part of the mix and other cryptocurrencies. So I would consider that a hopeful lesson. Next up, got to have the update on our friend Sam Bankman-Fried. This article is from CoinDesk. This is on August 11th, posted on August 11th. Sam Bankman-Fried jailed ahead of trial. FTX founder Sam Bankman-Fried was sent to jail ahead of his October trial on multiple financial crime charges after a federal judge revoked his release on bond Friday afternoon, saying the former crypto heavyweight appears to have tried to tamper with witnesses. What? Sam Bankman-Fried is willing to risk crossing the line in an effort to get right up to the line, wherever it is, said Judge Lewis Kaplan of the United States District Court for the Southern District of New York, later concluding, "All things considered, I'm going to revoke bail." He added, "My conclusion is there is probable cause to believe the defendant has attempted to tamper with witnesses at least twice. There is a rebuttable presumption that there is no set of conditions that will ensure Bankman-Fried will not be a danger." Barbara Fried and Joseph Bankman Bankman-Fried's parents, were present during the hearing. Fried quietly cried after the judge's ruling. Aww. Bankman-Fried, the 31-year-old former CEO of crypto exchange FTX, appeared in court on Friday after the U.S. Department of Justice moved to send him back to jail on allegations of violating the terms of his bond by trying to tamper with multiple witnesses. According to the DOJ, Bankman-Fried's reaching out to former FTX U.S. General Counsel Ryan Miller and using a virtual private network to, in the words of his defense team, watch the Super Bowl were enough to require a modification of his bail conditions. The last straw, however, was Bankman-Fried's sharing part of former Alameda Research CEO Caroline Ellison's private diary with the New York Times. Judge Kaplan cited both attempts to contact former FTX employees in a lengthy verbal order. While the use of a VPN in and of itself may not be overly significant, it speaks to Bankman-Fried's mindset, he said. Bankman-Fried's defense team admitted he shared some diary pages with the Times, though his attorneys disputed that he was trying to tamper with a witness. Here we have a very thin record with a lot of spin, his lawyer told the judge. The defense team also argued that jailing Bankman-Fried would make it more difficult to prepare for his trial. Judge Kaplan wasn't convinced by these arguments. I don't think that the revocation is quite the insurmountable problem. During the hearing, Assistant U.S. Attorney Daniel Sassoon argued that detaining Bankman-Fried was further warranted by the fact that he was increasingly visiting New York for pretrial conferences and trial prep. He's effectively unsupervised while he's here, she said. The DOJ also had alternative options in case the judge rejected detaining Bankman-Fried outright. The government would have been okay with a home incarceration, banning all visitors and blocking all internet access except for two databases needed to prepare for trial. This would have included blocking Google Drive, Sassoon said, noting that Ellison's diary was part of the drive files Bankman-Fried had access to. Mark Cohen, Bankman-Fried's attorney, tried arguing that there was insufficient legal basis to jail him ahead of trial and that the standards set by precedent cases had not been met. The only reason we know about Bankman-Fried meeting with a Times reporter is because he was complying with his bail conditions, Cohen said. Sassoon, the prosecutor, disagreed. I think the fact that defendant was more subtle in his methods than a mobster doesn't mean it was benign, she said. That's a great quote. Bankman-Fried is currently set to go on trial at the start of October on wire fraud, commodities fraud, securities fraud, money laundering, and related conspiracy charges. He faces another trial, tentatively scheduled for next March, on additional charges brought by the DOJ after Bankman-Fried's arrest and extradition. Certain pretrial motions from both the prosecution and the defense are due in the court by Monday, August 14th. Attorneys from both the defense and the prosecution said they were on track to meet next week's deadlines. Bankman-Fried's lawyers said they would appeal the decision and motion to stay the revocation of the bail until that appeal was heard. The judge rejected the stay. Bankman-Fried's going to jail ahead of his trial does not mean he will go to prison after it. He would need to be found guilty of at least one of the charges laid against him and sentenced to prison after. So this again was quite the talk last week, and everybody is obviously happy that he's locked up because he's a real bad dude, you know, and you want to talk about somebody who's the antithesis of the Bitcoin ethos. This guy is a fiat Ponzi, probably will go down in history, as kind of like the modern version of Bernie Madoff, except Madoff kept his Ponzi going for many, 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 many years. And SBF's imploded quite rapidly and quite spectacularly. Next up, this is a little bit of Bitcoin mining, I suppose. This is from Bitcoin.com, August 13th. So it was posted, it was posted 3 days ago, so on August 10th. TSMC, and again, I'll include links to all the articles in the show notes if you want to read them for yourself. TSMC advances towards 2 nanometer chips in Taiwan, a breakthrough that could revolutionize Bitcoin mining. This latest development follows the recent discovery of Samsung's 3 nanometer chips being used in a commercial setting, a milestone in the industry. TSMC's 2 nanometer chips boasting processing speeds 10 to 15% faster than their 3 nanometer counterparts could significantly transform industries like AI and Bitcoin mining. Nikkei reports that the Kaohsiung plant, currently under construction, will be the second hub for these advanced semiconductors following Hsinchu County. The decision comes after a board meeting on Tuesday where the company allocated roughly $6 billion for capital investments in Taiwan, with a portion going towards the Kaohsiung facility. The company's plans reflect a shift in focus, as it originally intended to produce older legacy semiconductors in Kaohsiung. However, a change in plans was considered following the flagging demand for computer chips, which started after the pandemic. The new venture towards 2 nanometer chips aligns with the global trend of advancing chip technology, aiming to meet the demands of fields like AI and cloud computing. Nikkei staff reporter Hideaki Ryugen disclosed that Kaohsiung Mayor Chen Chi-mai expressed support for TSMC's new initiative, committing to adjustments to water and electricity supply to ensure smooth construction. Ryugen further noted that TSMC is also seeking a site for a new plant in Taichung, which could become its third 2 nanometer chip hub in Taiwan. In the context of the broader industry, TSMC's advancement toward 2 nanometer chips echoes the recent discovery of Samsung's 3 nanometer gate-all-around semiconductor and MicroBT's WhatsMiner M56S++ Bitcoin mining rig. This marked the first known application of the 3 nanometer technology, discovered by Tech Insights. Samsung's breakthrough has long been speculated, and its commercialization can aid in the production of even more advanced chips. The discovery of Samsung's 3 nanometer chip in the Bitcoin mining machine is a crucial development, enhancing performance and energy efficiency. The WhatsMiner M56S++ Bitcoin mining rig produces an estimated 230 to 254 terahash per second, and the utilization of Samsung's technology could be a harbinger of things to come in the industry. For instance, MicroBT's rival Bitmain is believed to utilize chips supplied by TSMC, the same company venturing into 2 nanometer technology. A couple interesting things in this article. Number one, that they're building all these new plants in Taiwan, which, if you think Taiwan's strategically important, and then you're right. And even though they're trying to build some new plants in the U.S., um, takes a long time to get all that stuff permitted. And in fact, I heard something the other day that the plants that they are trying to build in the U.S., TSMC that is, they're having a hard time finding not only people to build them because they're so unique and so obviously clean rooms and all this kind of stuff, but also people to operate them. We'll have to keep an eye on that. But anyway, the advancement of the chip technology and the impact that could have on Bitcoin mining, of course, is very interesting, and it's really what caught my eye with that one. Next up, this is from CoinDesk. This was posted on August 9th, was updated on August 10th. And so there was some news last week about PayPal launching a stablecoin. And so I thought this, rather than regurgitate that, which I'm sure this article will go over, I thought it was interesting to hear about Congressman Maxine Waters, who says she's deeply concerned about PayPal's new stablecoin. So they went ahead with it anyway, but it sounds like there's going to be some uh, pushback from lawmakers and perhaps regulators eventually. Um, Representative Maxine Waters released a statement Wednesday saying she's deeply concerned that PayPal has chosen to launch its own stablecoin while there is still no federal framework for regulation, oversight, and enforcement of these assets. And as we know, Congress and indeed the regulators are very, very focused on stablecoins because those really act as substitutes for the U.S. dollar, and they really have no no real control over them at all. That would include Tether, U.S. dollar coin. This is this PayPal thing is based on Paxos, which is another stable coin. Um, Anyway, the article goes on. PayPal introduced its new dollar-backed stablecoin PYUSD on Monday, the first time a global payments firm has issued its own stablecoin. Waters, the top Democrat on the House Financial Services Committee, noted that PayPal has 435 million customers around the world, more than the number of online accounts of all the largest banks combined. Given PayPal's size and reach, federal oversight and enforcement of its stablecoin operations is essential in order to guarantee consumer protections and alleviate financial stability concerns, Waters wrote. Ruh-roh. The House committee recently approved legislation seeking to set up guardrails for U.S. stablecoins, with several of the Waters' fellow Democrats bucking her opposition to vote with Republicans. That bill is now eligible for a floor vote in the House, though it would be unlikely to get a warm welcome from Senate Democrats if approved there. Waters criticized the Republican-sponsored bill for approving stablecoins like PYUSD that are issued under state regimes, but preventing the Federal Reserve from overseeing them. Moreover, the Republican bill undermines the Fed's role as our central bank, making it harder to protect the economy against inflation or support maximum employment if stablecoins are broadly adopted, she added. Oh no! By contrast, Representative Patrick McHenry, chair of the House Financial Services Committee, he's Republican from North Carolina, expressed support for PayPal's new stablecoin in a statement issued on Monday. This announcement is a clear signal that stablecoins, if issued under a clear regulatory framework, hold promise as a pillar of our 21st century payment system, McHenry wrote. And so, anyway, I thought that was kind of interesting. Well, first of all, that there's, obviously there isn't like a bipartisan agreement on how stablecoins should be regulated, other than they need to be regulated. And uh, again, there was also somebody dove into the code and identified that there's all kinds of, in addition to being able to be rug pulled by PayPal, who controls the stablecoin, it's also built on the Ethereum network, which is centralized and you could be rug pulled there. And then there's also specific code in there that allows your account to be frozen or your funds basically seized. And some people posted on Twitter, it's right there, and they circled where it is in the code and that sort of thing. So you could be rug pulled like, 6 different ways. So, basically, I don't think this is a good thing to buy. Um, uh, if you need a stable coin, just keep some cash in a bank account, or in a money market fund, and then just buy Bitcoin, you know. All right, moving on here, we have this is from Crypto News, and now we're going to descend into more shitcoinery. This is August 11th, 2023, as when it was posted. Coinbase's new Base blockchain draws $10 million inflows day after launch. Here's the latest. So Base, a new Ethereum Layer 2 blockchain that has been developed by crypto exchange Coinbase, saw inflows worth just over $10 million on its first day after launch. According to data from Dune Analytics, the $10 million were transferred to the network by over the course of 24 hours on Thursday, one day after its launch. A little more than 15,000 new users joined Base on Thursday, and the day saw 40% fewer transactions than on Wednesday. The network, which officially went live on Wednesday this week, launched without its own native token, but Coinbase has encouraged others to build projects and launch their own tokens on Base. Among other things, popular but controversial meme coins such as BALD, B-A-L-D, have launched on Base, attracting a large number of traders seeking to profit from the decentralized exchange trading frenzy. Bald has been accused of being a scam after the deployer of the token suddenly and without warning removed nearly all liquidity from DEX liquidity pools earlier this month in what was described as a rug pull. Base is fully open to the public, and according to Jesse Pollack, so this is basically a layer 2 protocol on Ethereum that allows you to create new tokens, I guess, is how I understand it. Base is fully open to the public, according to Jesse Pollack, who is overseeing Base on behalf of Coinbase. The network already has over 100 operational decentralized apps running on it. Data from Dune also showed that most Base users transferred between $500 and $1,000 to the network, with the biggest whale so far transferring a whopping $17 million worth of crypto via a bridge. Wow. Coinbase has encouraged users to bridge their ETH to the new network, promising free non-fungible tokens in return in an effort to boost the activity engagement on Base. So far, on-chain data shows that more than 125,000 users have minted over 30 million free NFTs on Base. Okay. This is a shitcoin. Stay away from it. And that's all I'm going to say. Moving on, some now a little bit more focused Bitcoin news. The first one here is from Bitcoin Magazine. Breaking news. This is was posted a couple days ago. SEC delays ARK Invest and 21 shares spot Bitcoin ETF application. Friday morning, the Securities and Exchange Commission solicited comments on 21 shares in Cathie Wood's ARK Invest spot Bitcoin exchange traded fund application, further delaying the process. This is the second delay in the listing process for this ETF, with the first delay happening earlier this year. The third deadline for the SEC's decision is scheduled for later this year for November 11th. If the SEC delays the application again, it will go to its fourth and final deadline on January 10th, 2024. The race for approval for a spot Bitcoin ETF in the United States gained huge momentum earlier this year when the world's largest asset manager, BlackRock, filed for one of their own. After that, big institutions including Fidelity, Van Eck, and WisdomTree, among others, piled in and filed for their own spot Bitcoin ETFs. The first mover advantage of being the first to have its Bitcoin ETF approved and listed may prove to be vital in its performance. Galaxy Digital CEO and billionaire Mike Novogratz said in an earnings call earlier this week, the news of both BlackRock filing ETF and, quite frankly, Invesco plus Galaxy were going to fight like cats and dogs to win market share there. Once it's approved, it's a big, big deal. Earlier this year, on July 27th, the SEC approved a leveraged 2x Bitcoin futures ETF, which is total garbage. Never invest in leveraged, or Bitcoin futures ETFs. This is not investing advice, but don't do it. Which leaves many scratching their heads as to how that is safe for investors, but not a spot ETF. Grayscale, who currently is in a legal battle with the SEC over the denial of its spot Bitcoin ETF application, sent a letter to the United States Court of Appeals protesting exactly this. And then there's a link at the bottom of the article for more information on the spot Bitcoin ETF race. So I guess we'll see. Eventually, probably. I mean, Canada has spot Bitcoin ETFs. So someday the U.S. will get them, and we just don't know when. But we would imagine eventually, especially with BlackRock in there and everybody else. But the SEC is not making it easy, that's for sure. Next up is from Cointelegraph. This was posted today. Articles entitled "Bitcoin Bought by Corporate Giants Should Not Be Feared." And this is a Michael Saylor interview. So the article says, during a recent podcast interview, MicroStrategy's Michael Saylor expressed the opinion that large corporations purchasing and holding Bitcoin in their custody should not be a cause for concern. While speaking to Natalie Brunell on the Coin Stories podcast released on August 7th, Saylor emphasized the inevitability of third-party and corporate participation growing in the Bitcoin space. However, He suggested that while Bitcoin enthusiasts may desire total self-control or sovereignty over their Bitcoin, it might not be the only answer, as people will be using Bitcoin for diverse purposes. We need to be prepared for Bitcoin to infuse everything, Saylor stated, explaining that as Bitcoin becomes more integrated into society, it will have many use cases and there will not be a one-size-fits-all model. Uh, and this is a quote from him. There are different types of wrappers. Some people will always be self-custody. Some will be multi-sig. Some will need a layer 3 custodian. There will be a need for political or utility or functionality purposes. From a political standpoint, relying on a third party might be the only course of action. The mayor of New York is still the mayor of New York. Unless you get rid of New York City, California, or Iceland, the country political reasons will mean the need for custodians. On the technical side, there will be people that will want to transact in crypto with their mobile phones, so trusting layer 3 third parties such as Bank of America and Apple will be unavoidable, Saylor said. Another quote, Bitcoin is going to be a base layer. There's going to be layer 2s like Lightning to make things fast, and there's going to be layer 3s like Bank of America and Apple. Custodial layer 3 is going to exist to provide functionality. As for natural reasons, Saylor suggested the possibility that it's safer for certain people to entrust their assets to others. He gave the example of an 85-year-old grappling with Alzheimer's or the desire to secure holdings for a yet-to-be-born grandchild. I didn't complain that my mother and father had the car keys when I was 12 years old and I didn't get the car key, Saylor stated. Saylor stated that the optimal blend of Bitcoin integrations will be determined by the market. We shouldn't be afraid of all the different ways people integrate, wrap, embed, or execute with Bitcoin. There's no one right answer. The marketplace will determine the right mix of integrations with Bitcoin. And I couldn't agree more. It is a free market like we've really haven't had, um, at least over the last 50 years. And uh, we do need to keep our minds open to this. And I think I talked about this in one of my blog posts as it relates to, the need for something like Fediment, where, there you make certain trade-offs in order to have, uh, access to your coins and that you don't have to self-custody and deal with all of the setup. And one of the arguments behind Fediment and some of these other protocols is that people will, there's a large majority of people are going to have a hard time with self custody, or that's the presumption, and therefore there needs to be tools to help them with that. And again, what Saylor's talking about is even broader than that. That there's going to be political considerations, laws that have to be complied with, et cetera, et cetera. And there are going to be multiple layers. So Bitcoin being the base layer, you could certainly, if you want and have the inclination to, and you should, buy and self custody. But when you start using Lightning, there are certain trade-offs that you get maybe greater privacy, faster speed, but you do lose some of the security over your coins. You could potentially, if you're using a centralized wallet like Wallet of Satoshi or something like that, you could get rug pulled. So you kind of need to think in terms of layers and threat models, and probably keep the majority of your Bitcoin stored in self custody, maybe in a multi-sig, collaborative custody, or your own solution, and then keep a small amount, spending money, chump change, if you want to call it, in a custodial Lightning wallet, and you can use that for everyday stuff. And if that whatever got hacked or stolen or compromised in some way, lost the keys, whatever it is, it's not the end of the world. And there are non-custodial Bitcoin wallets that you can have, but those have other trade-offs. Obviously, the big one is there's nobody to call to restore your account. If you lose it, it's no different than like a Bitcoin custodial, non-custodial wallet, I should say. So anyway, wise words from Michael Saylor. Moving on. Last article here from Decrypt. Thought this was a little bit of hopium to end the podcast this week. This was posted on August 7th. Articles entitled Long-Term Bitcoin Holder Metric Hits New All-Time High. Long-term Bitcoin holders now control a record 14.599 million Bitcoin, according to data from blockchain analytics firm Glassnode. Over the past 7 days, the total balance held in these wallets has increased by 43,949 Bitcoin, or $1.274 billion at current prices. Long-term Bitcoin holders are addresses that have held coins for at least 155 days. According to Glassnode, previous research shows that this type of address is statistically unlikely to spend and thus, in Bitcoin slang, assumed to be hodling. The amount held by long-term holders also accounts for 75% of Bitcoin's circulating supply, suggesting investors are opting to hold onto their assets for extended periods of time. In February, long-term Bitcoin holders controlled as much as 78% of the network's circulating supply. Still, this sustained pattern of long-term holding may indicate a growing belief in the leading cryptocurrency's potential to serve as both a store of value. Checkmate, a pseudonymous on-chain analyst for Glassnode, has meanwhile pointed to the fact that the realized volatility for Bitcoin has also plunged to historical lows. Across 1 month to 1 year timeframes, this is the quietest we've seen the corn since March 2020, wrote Checkmate. Historically, such low volatility aligns with the post-bear market hangover periods, the reaccumulation phase. Realized volatility, sometimes referred to as historical volatility, refers to the price volatility an asset experiences over a specific period. It's typically calculated based on the change from one closing price to the next. Bitcoin is currently changing hands at $29,010, down 0.1% over the past 24 hours, according to CoinGecko. The world's largest cryptocurrency is also down 4.3% in the past month after hitting levels above 31,500 in mid-July amid a new wave of Bitcoin ETF applications. Still, Bitcoin is up 75% since the start of the year, solidly overperforming leading stock indexes such as NASDAQ Composite, which is up 33% year-to-date, the S&P 500, which is up 17% year-to-date, and Dow Jones, which is up 5.82% year-to-date. Okay, and then last, but certainly not least, check out this week's newsletter on Substack. I will include a link in the show notes. The article is entitled Bitcoin, the Printing Press of the Digital Age, Big Changes Coming. And with that, I will thank you for listening to the podcast this week. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. If you're not listening on Fountain, you probably should be. You can earn Bitcoin just for listening to your favorite podcast there. It's actually where I do all of my podcast listening now. Sometimes you get 60 sats. Sometimes you get 100 sats, and sometimes it's 6,000. So it's kind of random. Sometimes you don't get any. So but anyway, and then it's you can also support the show there if you want to send me some sats or stream sats while you listen. So check out Fountain. You can also follow my Substack again at bitcoinfortress.substack.com. I am on X, I guess it's called now, so Twitter. My handle is @NickReichert, and I'm also on Nostr. So if you go to my X profile, you'll see my Nostr pub key there, and you can follow me on Nostr as well. And I will talk to you all next week. Bye-bye.